Midweek stock market update, everyone, and the exciting times continue. The turnaround is looking more and more solid. Valuations, which is what you're seeing on the page here, it's the share price relative to expected profits, and red means the share price is quite high compared to the profits that are expected, and green means the share price is relatively low to the profits which are expected. You can see banks and energy looks cheap. Doesn't mean they're going to be the risers. Equally, the ones in red, which are overvalued arguably, are the ones which are rising. Well, does that mean it's good or bad? Remember, with all of this, I'm going to be looking at not just the price charts, but also value, growth, income, cash flow, momentum, Sortino, alpha. If you don't know what those things are, and plus a bunch of others, and across 10,000 stocks, okay, to look at the more bellwether stocks. It's been another good week. You can see a hell of a lot of green there, particularly now spreading into diagnostics, the sort of the healthcare super sector, and financial services, but energy still dragging. Took a hit. We'll look at that in just a second. As for exchange traded funds, those of you who might like funds, the 1 month performance, look at Brazil, 13% up over the past month. Technology sector, now some of these are leveraged, so be careful. Never do triple leverage. 2 times leverage is only if you are very, very risk loving, okay? And you can see the leverage ones over there. But we might do, I'll touch upon exchange traded funds in the future, so like and follow for more, and have a look at alpeshpatel.com/links to get more on those things. How are we doing on the markets year to date? Well, the Nasdaq's at its highest point for the year, so's the S&P 500 as well. And this is really typical, and what makes me so angry is my British cousins will be pretty much tracking or slightly beating the UK market. So maybe this year they got 7 or 10%. My American cousins will be getting 45, 50, 60 and my percent. And some of the followers on my Great Investments program who are NASDAQ heavy, and they'll mainly be people in their 30s and 40s who are NASDAQ heavy, will have doubled their pension because we got a 45% return in the NASDAQ. They'll be cherry picking that. Others might have just got a 40% return so far on their pensions because they were a bit older and they've gone for more the S&P 500 cherry picked. But even if you got just the index and 18%, you're still beating what the hell's happening in the UK. And it's no wonder British pensioners are so much poorer than American ones. But if you're in Britain, you can invest in all of those stocks. Now, these are not picks. I'm just showing you what over the past month, some of the big rises in just a month. None of these I own. None of these I'm planning to own. I'm just showing you what's been performing. And similarly with FTSE 350, none of these I own. None of these I'm planning to own. Okay, I may well do a special situations broadcast, so do follow me and like, etc. You know, all of that kind of thing. Subscribe on YouTube for more to see if any of these are worth going into. But more importantly, what I want to do right now is really zoom in. Look at that downward channel. You can see it, the 2 parallel black lines, or 3 parallel black lines. Downward channel we broke out above it. And if you're looking at the charts alone, that is looking relatively positive. Now, I could give you a whole bunch of macro and microeconomic reasons why that might happen. All that matters right now to you and me is that it has gone in that direction. I did not expect it to go that way, but the portfolio, as always, is positioned that if the markets rise and we get a tailwind, we do incredibly well. And you'll see that with the stocks. You've been following me for a while, you'll know that as well. Okay, I do expect at some point potentially a pullback here. Better to be cautious than bullishly optimistic, and then a move up. And the reason I say that is because it's a common pattern. When you get a breakout to the upside, you get a fallback, and then you go up. And similarly over here, this is bullish. It's above its signal line. It's the MACD. I've done videos separately on YouTube and elsewhere on the MACD, and then you've got it moving in the upward direction. So for the moment, all looking good. All looking good for the moment. FTSE, however, not so good. So if you're British company bias, you're a bit screwed. And I've got a lot of people who signed up for the Great Investment Program because they're fed up with their IFAs, they're wealth managers, they're a bit scared of what to tell them. Can you believe it? They're losing you money and you're scared to tell them that, listen, what the hell? The Nasdaq's up 45%, the S&P 500 18%. Why my pension produced 0 returns over 2 years? And they'll come up with some poor excuses. So here we are with Apple, okay. and you can see the breakout in Apple. It's not we're not exactly risking high-risk companies, are we? And you can see what the analysts think as well. Now, I'll tell you the reason why so many wealth managers and fund managers are destroying your pensions is this. If you start off, let's just look at the last 2 years. They'll say to you, yes, but you've got to understand, Mr. Smith. If you take January of last year, the market fell last year, and then this year it's recovered. So in actual fact, you're back to where you were. Well, that's really bad, because last February we said to people, look, I think it's time to get out, go into cash. Now, wealth managers can't ever tell you that because they can't charge you money for just you holding cash. So you were able to get out. And then this year, when we said get back in, you had all of this massive gain. And that's how profits are made. And you can look back on my Telegram and YouTube and know that we got back in January. Did I expect this big a gain? No, I didn't. Do we normally get in and out so frequently? No, we don't need to, because normally we've got these kinds of gains. Okay, we don't trade our investments. So Apple, still more to the upside. I'd buy more today if I could, but there's a limit to how much money I've got. Similarly, positive for the same reason as Apple. Okay, and this is the problem. When Alphabet fell last year, every fund manager, whether it's Scottish Widows, whether it's the IFAs and the wealth managers, St. James's Place, all the rest of them, they kept their clients in cash and they made them lose all that money. So like snakes and ladders, they'd gone all the way up and they went all the way down. So basically, they were back to where they were in 2021. They bloody lost everything. Whereas they should have got them out in February into cash, which they're not allowed to do. Okay, and like us, got back in January, so that you went up. And if you want to follow that, look at Telegram, go back on YouTube and you'll see that I said the same with Alphabet. Or look at alpeshpatelreviews.com, and we're going to put a lot more reviews up. Okay, Microsoft, similar kind of bloody story. All those gains, snakes and ladders, took you all the way plumbing back to 2021. You wasted 2 years. You wasted 2 years. You should have had this gain and pocketed it if your dimwit IFAs knew what the hell they were doing, which they don't because they read off a script. Okay, and then when it fell, you shouldn't have had any problems with holding that at all, because you shouldn't have held it. It should have been in cash, as we said. And then when you got back in here. Now, do I have people who follow me who don't do that? Yeah, because what they do is they bugger off and say, oh, I forgot to look at any of this. Well, fine. Then, yes, you've wasted 2 years of your life, and you're back to where you were here, and you've wasted 2 years, whereas you should have just listened once a fortnight. That's all you have to do, once a bloody fortnight. And it's your pension. Nobody cares about your money as much as you do. Okay, I don't even care about your money as much as you do. Think about it, right? So that goes in that direction, still bullish, and I would buy more Amazon. Disney is a special situation, so it's higher risk, okay? That means it almost meets all our criteria, but not quite. And I've projected it here. That's why I'm projecting. Doesn't necessarily mean it's going to happen. It could easily go back. It's high risk, high risk. I'm going to say it again. High risk. It is oversold. It's high risk. I know all these banks love it, but it's high risk, okay? So you might want to wait a bit more. Just keep watching my broadcast. NVIDIA, you know the story. If it drops X%, you will sell Y%, and the figure Y depends on your risk appetite, okay? And that's really important educationally for you to know. It's overbought, so it could drop, and I don't know what Y will be because I don't know your risk appetite. If I knew the future, I could tell you what Y should be, right? If it drops X%, you'll sell Y%. Y depends on your risk appetite. Okay, X is easy. It's going to be 10% or 20% or 30% or 40%. You'll just fill in Y for each of those values based on your risk appetite. And that's the best way to do it, so you get a good night's sleep. Now, we exited Tesla, which is a special situation. Got in January as a special sit, as I said. We exited when it fell off here. And now it's going back upwards, but we're still out because it was a special situation. We made our money. I wanted to ease back on some of my equity holdings last month and the month before because the market looked a bit iffy. I didn't know they were going to continue rising, which they have done. So in hindsight, do I regret selling it? Maybe. Maybe. That's hindsight. Doesn't matter. I've got enough of all the other stocks, so it's okay. And I want to explain this to you so you know that even with professionals, this is how it is. Even with professional regulated hedge fund managers, this is how it is. Now, Meta, like NVIDIA, X and Y, okay? Use that strategy because it's a bit overbought. I'm not saying it won't go up over 10 years. Of course it will. But I'm talking about in the near term. Would I buy some today? Well, if you put a gun to my head, but I'd use the NVIDIA XY strategy for exiting. Okay, Service Now, as you know, I own and have bought some more. If I could, I'd buy even more. So that's where we are with that. Now, look at that. Fell off a cliff. Now, let that be a warning to you. Let that be a warning to you. This can happen. Can I see the future? No. However, is that going to go this way or is it going to rebound? We don't know, because we know it falls in the past. So if you're not in, I wouldn't get in. If you're already in, then you know what to do. You've got your XY strategy. You might have exited if you're risk averse. If, like me, you're a bit more risk loving, you'll hold on and wait and see what happens. That's what the analysts think. Oh, by the way, what do the other analysts think? Well, there's no sells there. Right? I wouldn't buy more though. Netflix, I don't own, but I'm showing because it's popular. Similar kind of story. Keep an eye on it. This is what I said would happen, and I said it would happen here when we started covering it after their results. And I said 70% over that time frame. Actually, it's well on its way to doing that. Would I buy more today? Well, I don't own any of it, but yeah, I'd be okay, but I'd keep that XY strategy. Now, if you're a private client, if you're on the Great Investments Program already, and there's more about it here, then you will get a far more detailed report on Friday on the private channel. But if you're not, then this is yours. Enjoy, learn, be entertained and informed by me. Good luck to you all. Thank you.